Welcome to Financial Detox. I'm Jason Labrum, and we're excited to be here with you this week as there is a lot of things going on in the geopolitical, macro, global economic environment. Things are shaking and baking, so this Financial Detox episode should be full of information to help you make better decisions, help you get financially detoxified, avoid toxic financial advice, and manage your wealth for maximum impact, which is the purpose of this show, is to help you manage your wealth for maximum impact and achieve the best financial life you can. Again, I'm Jason Labrum, your host, and in studio with me, as usual, is my man, Alex Klingensmith. What's up, Alex?
Hey, I'm doing great.
We're
great.
back.
Excited to do our show. Yes, we're back.
Here we go. Financial Detox in our newly refreshed show, produced by the famous Brian and Shayna. I mean, this is good stuff.
Famous.
Yeah. You didn't know that. You're the most famous producer in the world, best podcast in the world.
That's us, yeah.
Thanks, Brian. Appreciate you in the background. He's got some good visuals we'll be throwing up today too. And we're going to get into some charts and stuff later, talking about this crazy market volatility, what's been going on with the whole Japan carry trade. Really interesting stuff going on. I think we're starting to see the fragility of the global markets and how important it is to be financially detoxified, have your ducks in a row and know what you're doing. But Alex, we've been grinding on the information over here at IDA Wealth, which is our wealth management firm. Financial Detox is kind of a spin off of that as a consumer education brand. We get a lot of information from our clients, right? We really get a really good pulse on what investor sentiment and investor behavior is because of our business and what we do for a living.
We're on the front lines. I mean, right?
Every day.
We're not behind some desk just looking at computers all day. We're with people, hearing them, listening to their emotions and their thought, their goals, their, assumptions, their fears, right? This show's not meant to be about fear, but at the same time, we're going to talk about some things that are pretty scary. Like last show was mostly about the election, right?
Yeah.
But then you tie them both together. You say, well, this is an election year. I think people start to make predictions and say, well, if this person wins, they're going to fight with China. Or if this person wins, they're not going to fight with China. What does that mean? Or Japan or Iran, it's interesting.
How many client calls did you get as a financial advisor that, Sunday night things started to melt down? I think I got a text or two Sunday night, but I think our clients are unique in their
only one.
Very
and exactly who it was. Yeah, only one. But in all fairness, I mean, there's over 1,000 clients our advisor teams serve, at least 1,000 clients. I personally, about 55 or 60 or so are the ones that I'm going to get the call first.
Right.
So 1 out of 60, that's my ratio right now.
That's really low. I mean, I think that's a testament
the story, right?
To they're financially detoxified. So they're enjoying their life and they're living with financial peace of mind, and therefore they don't have to stress out when things get a little wacky.
You hope so. That's what we try to do every day, all day, and pursue ways to help people become grounded when they don't feel grounded, and bring them back to what they can control and what we can control with them and for them, right?
Right. And you know what's weird is I've seen you in the office so much because I mean you're like haven't been on vacation.
Is that weird?
Normally, I'm just trying to make sure you're not on vacation too much, right?
Yeah. Well, I surfed this morning if it makes you feel any better. Oceanside Harbor was beautiful. The water is 73. You can see at least 20 feet down.
It's clean. Okay.
Maybe head high set waves. So I got that in.
Oh man, that's beautiful. Well, you are bronzed up. I don't know if it's Brian running the camera and just crushing it, and he's giving you
filter.
Are you giving him the Chilean tan and you're dissing me with the white guy stuff, or what's happening here?
It's just how it is. I mean,
he's so good looking, Alex, the Chilean tan. Oh my gosh,
it's the half Chilean in me. That's whenever summer, it stays around longer. But it's on theme for this show, global markets, right? The world's a big place, but it's also a small place.
The global tan. You already got the global tan going. All right. Well, hey, it's good to see you and be back here on the show, Alex. We put out a show around once every month, or we'll do it more than that if there is something that's really popping and going on. And so geopolitical turmoil, how we should navigate this turmoil with our money. It was interesting. I'll tell a quick story. I like the All In podcast. It's pretty good. One of my favorite podcasts, actually, for getting real economic data information about what's current and what's going on. So I was listening to the All In podcast, which was probably recorded about 6 or 7 days ago, judging by what's happening. And Chamath and a couple of the guys were talking about how the events of Sunday, so it must have been Monday or Tuesday, they recorded that podcast. Last Monday or Tuesday. And they were talking about how this volatility is going to continue. And Chamath was saying, and I love Chamath, he's very smart. I would not want to have a smart contest with him of who's smarter, because I think he would smoke me. But he did say, this volatility is going to continue. I don't think this is the end of it, but yet it was the end of it. I mean, it was really kind of a flash volatility, at least temporarily. Now, he may be right longer term, but I mean, there was a radical move in the market. I believe, at least intraday, we had the biggest single point move ever in the market history, and as far as points. But look, the markets are much higher today, so that's less of a percentage than the biggest percentage move ever. But still, it was statistically significant. And when you look at Japan and what happened, Japan has had radically low interest rates for such a long time, like zero interest rates. And so there's what's called a carry trade. And this is people borrowing yen at near zero and then converting it to dollars, investing in, let's say, US treasuries at 5%. What happens, though, is Japan came out and said, we're going to raise interest rates because they, like the United States, are dealing with inflation. So they want to slow down inflation. So as they go to slow down interest rates with rising interest rates, that starts to break that trade. And some of these trades are massively leveraged, meaning they're leveraged by borrowing against the currency or the US treasuries you own here and leveraging up so you can get more money out of that trade. And what happens when interest rates go up, all of a sudden you have to start covering margin calls, or it may not look as good. So it affects all markets because trades now have to be done to create liquidity, and it may be equities, it may be other bonds, it may be U.S. Treasury. So that's what sent the shockwave through the system. It was amazing to me how fast it resolved itself. The next day we recovered almost half of it on Tuesday, and then I think it was a positive day on Wednesday and Thursday, and so on and so. I mean, we're right back up, right? So it was a radically fast recovery, although it kind of exposed some of the fragility of the markets and what's going on with debt.
Yeah, it was like a 3 or 4% drop in all major indices, right? Last Monday.
Yeah, generally. And I mean, Japan at one time was down 13% in a single. So that's massive, right?
I had a good question that ties it. You mentioned inflation. I'll bring it back to the US since we know the US even better than we know Japan. But he asked this question. This is a retired MIT professor, right? Far more of economics. So I don't know how he decided that I could help him, but because he's a really smart guy.
Because you do this for a living. But
that's right.
You're pretty good at it.
Well, actually, those kinds of clients, by the way, sidebar, are actually the best kinds of clients, because the ones that truly want to understand and learn how the process and the nuts and bolts really work, engineers, right?
Yep.
Economists, like once they get it and see how our process works and how the tolerance band rebalancing works and how the decisions are made by the investment committee and all these things, the evidence-based, the whole story, they become the best clients ever, because then if anything, he's an advocate. He's referred to so many clients over the years because he gets it. But he asked me a question I couldn't answer. And I love those ones because I'm like, well, I'm going to go back and find the answer for you. I don't know. Yeah. He said, I know this is a little bit crazy, but bear with me because I think about this stuff. It keeps me up at night. I'm like, please share. What is it? And he's like, well, so inflation's here. It's been happening.
Right.
He's really worried about China and Taiwan and us, right? The whole, if we go to war with China, literally was what he said. If we go to war with China and inflation at the same time, it doesn't do what it's supposed to do. If we can't control it, if the Fed doesn't time that or get that or right, combined with a war with China, is that one of those events that what do we do?
Buy guns and ammo, right? That's the
answer.
I
didn't tell him that, but I said, well, we're working really closely with PIMCO right now because PIMCO is the largest bond manager in the world. And so we want to be very close to the topic of interest rates and inflation and what are they thinking?
Yeah.
Right. Not just what are we thinking, but what are the biggest minds in this specific space thinking? I'm like, I'll bring it to PIMCO and see if I'm sure they have some sort of analysis tool, right? Where remember BlackRock had Aladdin. PIMCO's got
Yes.
their, version
Yeah.
of that.
Yeah.
But I thought that was a really interesting question, and one that ties into this, the geopolitical nature of this show.
Yeah.
What do you think, Jason? What do you think people can and could do if that were to happen?
I think it's a big ask to talk about war with China, right? And would it be what kind of war with China? Is it, we've had kind of an economic war going on for years and years. If you look back to when we had the Cold War with Russia, that war is going on. So there's a lot of things for it to turn into a full scale war. You look at how much America buys from China. If we went into a full-scale war with China, we would stop buying stuff from China. It means the inflow of money into China would almost stop completely. They do have imports from other countries, but it would be a dramatic financial economic catastrophe for China. So I don't think they necessarily want a war with us, just like we don't want a war. Also, how do you wage a war in America? And really, I'm not being a dumb hillbilly here, but nuclear strikes from far distances, yes, but America has 70 plus million people who own guns and know how to use them. Like, that's a 70 million person army that's spread out across the country. You can't really invade that. It would be impossible, I think.
Mm-hmm.
So maybe I'm wrong. This is over my skis. There is the Armageddon question. I think, right? Like Armageddon. What happens in Armageddon? We go into a world war and there's nuclear and it's literally Armageddon. Inflation, the dollar's worth, 10 cents on the dollar. What do you want? Like, what would you want to have? Let's ask Brian, right? Producer Brian. So Brian,
on the spot with this
I want to
one,
get him
yes.
on the spot. This is it, Brian. We've done 2 shows together,
Poor
so
guy.
we're going to put you right in the hot seat. So Brian, because this would be a great question for just somebody who doesn't do what we do every day.
Sure.
Armageddon. The dollar's worth 10 cents on the dollar. You need food. What asset? What is going to help you in an Armageddon scenario?
Well, I think the best offense is a great defense, and defending your own property is going to be, in an Armageddon case, I think that's the number one priority is defend your own, little space that you have on this earth.
I think that's the answer. It's like, but you need food and water, right? So, do we migrate to a place that has readily available water? Are you in Lake Havasu or are you heading towards Lake Powell? Really, like if you think about trying to get out of Southern California where we live, getting out of here in a catastrophe is not going to happen, at least in a car. So if you have a horse, that's awesome. Or a really good quad with extra, motorcycle or something with extra gas tanks. It's really...
Helicopters are always great.
Helicopters are phenomenal. Magic carpet's phenomenal. Airplanes are great. It's tricky, right? It's a tricky scenario. God, please, Lord, don't let us go there, right? Could you imagine? It would be horrible.
Yeah. I gave him an answer that wasn't like what you guys just said, by the way, because I didn't want to really go down this path too far. I don't typically, but I think it's fun. It's fun for a podcast because we're human beings too. Just because we don't have all the answers. We know where to find the answers, right? With data and history.
Most of the time,
we still also get worried. We also have the same human behaviors that investors have, right? The common mistakes that we make are because of our like loss aversion, or we're overly confident, or the hurting, or we're familiar with something, so we buy it. But when it comes to major things out of our control, I personally, and I know we agree on this, Jason, it doesn't really make a lot of sense to really spend a lot of time and energy on things you can't control anyways. So, but then reinforced with like good news is that, here's one. Since 1926, the S&P 500 has been positive 73% of the time in a calendar year. So, and there's been a lot of crazy stuff that's happened since 1926. World wars, several, right? So
are you taking us there? Or are we jumping into crisis and events? Let's do it, Brian.
It's a teaser.
I like it.
I have a different slide that Brian has.
So one of the other questions that people are talking about, and Brian just threw up a picture, but you talk about what's going on with Iran is supposedly going to retaliate, and they're retaliating to a retaliation, which was in response to a retaliation of an attack. It's just it's senseless and so stupid. If that happens, do we get in a real situation? I think we got to take a look at crisis and events, and we got to say what's happened in the past, because
Yeah.
Yes, it'll be different this time, but it's always different this time, but it's not really different. I mean, people are people. We're creative. We're thoughtful. We solve problems in a way that is extraordinary. I think that's how civilization has advanced so much. But when you look at the history of crisis and events, S&P 500 since 1970, I mean, there's some serious things that have happened, right? I mean, you look at Saigon going way back. You go to nuclear accidents. You go to different wars. How about the U.S.-Iran-Contra affair, right? You've got Oklahoma City bombing. America goes to war in the Middle East. And that's perfect, Brian. That's from our, and if you're watching this on YouTube, you get a good look at this. If you're not,
there's so much stuff on that slide. Oh my gosh.
Yeah, it's crazy. It's a blur. So you got to really pause it and take a look. But I mean, this is just showing you all of events that at that time people said, this is different. This is different this time. And maybe this is. I got one client who asked a really deep question. I think I read it out to you. And it was just about Iran and the war and inflation. And he went through all the things, all the headlines. And, this time is different. And I said, it is. It's a different headline, but it's kind of the same stuff in regards to, could it be different? For sure. Will it be different? For sure. But how are you going to respond to that? So what do you do with your portfolio? Looking at the chart from our friends over at First Trust, thanks for all the good info they provide to us. The markets during this time where you've had all this volatility have continued to rebound and be resilient, because I like to say it, and I wish I had a depiction of this, but like the market's kind of like a funnel, right? And you think about new ingenuity and creativity and innovation goes in the top of the funnel. And then out the bottom, the smaller hole of the funnel is junk that falls out, companies that go bankrupt, things that, aren't working. I mean, just garbage falls out the bottom. But all this new innovation is so much bigger and so much better than what's dying and falling out, that's how the markets continue to go up, is because new companies, new stuff. So it's also why you don't want to be holding one of the investments that fall out the bottom, right? Because that's a true loss. That's real risk.
Yeah. I think also, I'm fascinated by the behavioral finance part of all this. It's become a really big thing in the past decade or so. I think it's really important as an investor to be able to work with someone. Hopefully you're working with a professional, fiduciary, wealth advisor, but to be able to help with that person identify early on in the relationship, identify what your weaknesses are as an investor. Like what gets me, what really freaks me out, and then share it with the advisor person that you are working with so that they can help you. Not once you've identified a problem, you can then solve for it, right? So am I one of these people who freaks out because of maybe personally I have something personal with the Iran-Israel conflict? Maybe I have a lot of friends or family that are Israeli. So that one just really gets to me. I'm like really scared and angry even, and my emotions can control me. And maybe I don't even know what Japan thing you're talking about because I don't ever read that part of the world's news or something. But once you identify what your weaknesses are, and if you know how to ask for help or you're willing to ask for help, then when your advisor or team is helping you through these major life events, you've already planned for them. There's going to be something that's going to freak you out. So it's not a surprise. You're not scared of it. It's like, I'm going to try and do a metaphor at some point on this one for you too. But I think if you already know you're going to freak out in something in life, something's going to get to you, and you plan for it, then you can go back to what can I control? I can be diversified. I know how I'm going to rebalance through volatility. I know that if I let my behavior get the best of me, I'm going to lose out on lots of money because I'm going to make mistakes. I'm going to sell when it's really low. Yeah. And I'm never going to get back in until I feel comfortable. And then the average is negative 2.82% for not just sticking to a plan, letting behavior control.
Well,
you, right?
your returns just get crushed, right? When you try and get in and out. I mean, think about the people who panicked out on a Monday a week ago. I don't have the chart up in front of me. I could get it here in a second, but you panic out at the bottom of that market because, and I'm on my computer bouncing here, but you look at like a broad S&P 500 on Monday, you sell out when the S&P 500 is at like 5,100. Today it's at 5,400.
Yeah.
Percentage wise, a statistically significant move. And now what do you do? Now it kind of rebounded. So you're like, do I get back in? Do I stay out? what do I do? That's the problem. It's like you have to guess in time. Okay, I'm getting out because things went bad. People don't go, I'm getting out because I think they're going to be bad. They typically wait till they are. Then they get out. So they're lower. Then you got to get back in. And what if it takes off? What if it keeps going down? You feel really smart for a while, but then you're like, wow, I'm never getting back in. It's really bad like I thought. Then when do you get back in? It's really tough.
It's a real thing. I mean, people think that they're outsmarting the market because they're timing events. Even like, let's say I'm going to time events. I'm going to be invested in a certain part of the world because I'm reading all these headlines and news. And I know you and I both hate the social media algorithms that target you once you start learning about something. If they want to feed you more of the same, so then you think you're an expert in the topic. When half of it's probably not even truthful, anyways. But if I'm going to time the Japan thing, and I'm going to, once that does what I think it's supposed to do, then I'm going to jump to the Israel thing, and I'm going to go over here. It's like, that's crazy, right? Talk about a stressful experience too.
Well, I mean, we've got to recognize that. I think this is the biggest thing that Financial Detox has brought to people recently is that the social media algorithms are designed for confirmation bias. And what that means is that whatever you're looking for or thinking, or they know already what you kind of feel like and what you think, they are going to feed you that information relentlessly. More of it, deeper into that vein, deeper into that vein. So we're all being pumped full of this cognitive bias, this confirmation bias. So we think it's just impossible to imagine that somebody that doesn't think like us, I mean, how could they possibly not think like us? Because we've seen thousands and thousands of confirmations that we're right. I mean, it's just crazy, right? So that's dangerous. I think that's the most dangerous thing our society has ever faced. And that's what scares me the most is division among people and people who are unwilling to hear a point that differs from them. Unwilling to even have the conversation or have an intelligent debate. Like I kind of thrive on that. I love debate.
Yeah, sometimes I don't really even know what you believe in the debate. Cause I'm like, wait a minute, you just said, but then now you're over on this other side and then you bounce back. Right. Which one are you? Like,
I hope that's healthy and good, right? Because I'm willing to look at it from different lenses. And I think that's why we can work with conservative clients and we can work with liberal clients. And, but there is a contingency of people out there who are unwilling to accept that maybe somebody else is right. Maybe what they think isn't perfectly correct, but it's understandable because they've been fed the confirmation so many times. Yeah. Every time they click on Facebook, every time they go to Instagram, every time they go to the news, they're getting more and more of what they want. That's dangerous. Like who said it? I think it was Albert Einstein said the only thing worse than being wrong is thinking you're right when you're wrong. And I mean, that's a real situation. So we talked about, I mean, this recent volatility, Alex, and just to keep us rolling forward, we talked about the recent volatility, and then we have a staying the course concept that we've talked a lot about with clients. And the staying the course concept, which you can see up here, hard to read, I understand, but the concept of this is that there's been volatility consistently for decades and decades. Volatility is not new. In fact, the average year from peak to trough, at some point during the year, the markets are down 14%. Think about that. Like, if there isn't volatility, that's weird. And the reason why volatility hits us is because the market's processing information, processing that Japan could raise interest rates, and that's going to change a bunch of trades, really big trades with huge hedge funds that are running the logic there. So these are things that the market has to process this information. As it gets new information, prices adjust accordingly. So volatility isn't weird, and volatility isn't, well, let's just say it this way. It's supposed to happen. It's normal and it's a natural part of markets. That's why we as investors get rewarded for being investors, because we withstand volatility. If it was super simple and it was easy and there was no emotional strings attached, well, then the returns would be de minimis because everybody could get it. And if everybody would do it, then it wouldn't work that way it works. So you get 10%-ish, maybe 8 to 10, 6 to 10 for owning diversified stocks. You get 4 to 5 for owning diversified bonds. If you go into private equity, maybe you're in the low teens. Private debt, you're in the high single digits, low double digits. You get rewarded for being an intelligent, patient, disciplined investor. And that's why markets work and how they work. So if you want the free lunch, it doesn't exist in this particular space. And it really doesn't even exist in in real estate. Look at what people deal with in real estate. And oh my gosh, all the people right now who own, even multifamily or especially office buildings who've spent their whole life investing in office buildings. I mean, this is there's some real challenges and volatility facing those markets currently, which they'll wash themselves out too.
Yeah. Back to the topic of, this geopolitical just turmoil, right? Just a lot happening in the world right now. A lot of the news outlets are also confusing to me, by the way. And I'm the worst sample size person for this particular topic because I don't watch the news. I read news, but it seems like they're jumping from one headline to another more than even I can keep up with. I'm like what happened to the Israel-Iran thing? We don't care anymore about that? Yes, we do. Of course we do. Like why isn't, and then what do you do if you have a personal vested interest in one of these big headlines? That's what I think people listening in are like, what's the good advice that a wealth management leadership could give me as an investor if I'm freaking out about one of these big headlines, right?
Well, I mean, the media is 100% committed to not helping you do what's in your best interest. They are 100% committed to getting ratings. And how do you get ratings? Is sensationalism and driving human fear and human greed. You got to know that, recognize it, right? And there are different media outlets that are pushing different propaganda. Liberals would say that Fox is pushing false news and propaganda. Conservatives would say that CNN and MSNBC is all false news and propaganda. And the reality is they're probably both a lot of false news and propaganda. I mean, there was a picture that came out, Kamala Harris getting off an airplane, and there was a photo with this whole crowd, right? But if you look into the reflection of the airplane, there's no crowd. There's nobody there.
Wow.
They generated a picture through AI, I'm sure, to show this huge crowd around her plane. There was no crowd because, thank you. The reflection, that was beautiful, Brian. Holy cow, you are worth all the money we pay you. We're going broke, but we're going to go broke looking good. Not really, but
I have not seen this picture.
Look at all the people cheering with signs and having a wonderful time. However, if you look at the shadows, there's no one there. This is a fake picture that was put out by some of the most prominent media, or at least it appears to be fake. I'm not going to say consequentially because then I could be an idiot, and I don't want to be an idiot. I'm exposing that maybe I'm wrong, and I think we should all be willing to be wrong. And I would love to seek opportunities to be wrong because that's a real learning moment. But there's been about 14 or 15 different reiterations of that, different angles and stuff. There's nobody there. There's nobody in the reflection of the plane.
So I see that. And I'm like, if I'm trying to be a responsible citizen of this country and be informed on what's going on around me in the world and be able to in my relationships and friendships and things communicate intelligently, what do I do then? Right. That's why I don't personally watch the news. I haven't watched the news since college because I kind of just got fed up a long time ago. And I'm like, this is all confusing. I need to get information, but I can't visually do it because it doesn't bring me any joy. It actually makes me frustrated.
It does. Right? I mean, comparison and sensationalism, fear and greed are two human emotions that don't bring happiness.
Yeah.
And if you look at the overall suicide rates, you look at depression rates, you look at people on meds, is higher than it's ever been. Thank you to the fake COVID, which was really just the flu. They just announced that, by the way. Did you see the CDC or somebody just came out and said the way to treat COVID it's the flu? So after 2.5 years of shutting down the economy, causing 13% unemployment, destroying kids' lives, seniors in high school and juniors in high school who didn't get their careers, thank you for the absolute dramatization and sensationalism. I mean, it was a farce. Yes, a lot of people died, mostly because they put them on ventilators, and you can't live on a ventilator for a week because it burns your lungs up. So crazy stuff. And now the facts are coming out. But right, people were considered conspiracy theorists and freaks because they were saying COVID wasn't real and I'm not going to get vaxxed. But yet Joe Biden, who's quintuples, however many, 10 times vaxxed, and he just got COVID recently. But I thought they said the COVID was a problem of the unvaccinated. It's just crazy, right? False news. So I don't know, Alex, what the answer is, because I think you
what am I supposed to do? You never answered my question.
Find it on Google. It's not there's no news articles popping up on Google for me to find that.
Was that your all-in guys, maybe?
Oh, well, if you look too, Google literally erased the Trump assassination. They would not allow any searches associated with the Trump assassination. I don't know if they still have done that, but if you searched Trump assassination in Google, Zero. Not a single article.
Attempted
assassination.
Attempt. Yeah.
Thank you. But so this is scary, right? This is what's scary to me. And I think we as a civilization, as a population, we owe it to ourselves to be detoxified from bad news. I mean, bad information, or we call it toxic financial information. I think bigger than even that right now is just being detoxed from sensationalism of the media and cognitive bias that's driving a wedge between us, because there should be no racism in our country. If you're black or you're dark skinned, the reason why is because your ancestors came from a warmer climate. You're no different. We're the same people. Black people, white people, Asian people, it doesn't matter. We're all the same human beings. We bleed the same. We have the same kind of hearts. We're the same. So the fact that racism is in the forefront is ridiculous. The fact that we're all cognitively confirmed in every one of our weird biases and beliefs and just relentlessly pursue down that's to me the more dangerous thing. But I think we have to kind of tie it back to money somehow, and finances and financial detox. And I think if you look back, historically speaking, we've gone through some radical things in our past. If you look at the positive and negative years of just say the S&P 500, positive and negative years, I think you said this when we started, Alex, 72 positive years. Basically it ends up being about 70% of the 1 year period.
Yeah. 73%. Well, I guess the reason why we're on this show is because we with our whole company, right? We spend all day, every day helping people steward true financial peace of mind, peace of mind.
Yes.
I know I'm not an expert in politics. I know I'm not an expert in news. I don't try to be either, because again, it doesn't bring me joy, but I suppose that having, somebody who is anchored in reality around what they can and can't control as it pertains to finance and investments is the purpose of why we do what we do, and why many people, I know they do have true financial peace of mind because they tell us they do. Right.
Yeah.
And that's what gets me up in the morning. And it's what I love doing. It's really a great thing to be able to give somebody that gift, is what it really is. Right.
People are going to figure it out, right? The pendulum has swung far enough into this radicalization. And I believe that people are going to start recognizing that news is fake almost wherever you get it. I don't know where you can get the real stuff. I think you have to just talk about it with human beings. We got to go back to conversations. You got to go back to talking about, with your financial advisor, about your fears, about what's concerning you, about how your portfolio is structured in a way that can help you navigate the inevitable and certain volatility.
Yep.
But volatility doesn't necessarily mean risk unless we throw the Armageddon sword, right?
Or if people blow themselves up, they actually sell at the bottom and then buy back in one at the top, and then wonder why their performance is not very good.
Such a good point.
And they get mad at the market, and you're like, no, it's not the market's fault. It
was your behavior.
It was you. You did this to yourself.
Yeah, that's a really good point, Alex, because it's literally the behaviors associated with volatility that can turn into risk, right? Volatility turns into risk if I panic at the bottom when I had a plan and I knew I was exposed to 15 or 20% volatility, and then all of a sudden I change my plan because I'm feeling that and I don't like it. Now I've just turned volatility into risk because of a behavioral blunder.
It's a heavy show. This stuff's real. It affects everybody. We all have something right now that's scaring us, I'm sure, in the world.
Yeah, but I love it. Look at this too. If you invest over a 1 year periods, it's actually 77%, according to this latest data, 77 since 1937. So we're going way back. 77% of 1 year periods in the S&P 500. That's only one index, by the way. That is not the market. We could get into that whole conversation, but the S&P 500 is 500 stocks, diversified, mostly large cap though, and all US. So that's not a totally diversified portfolio. I think you could even do better than these numbers, but the average 1 year probability of a 1 year being successful is 77%. If you're invested 3 years, the probability of a successful outcome or a positive outcome is 87%. When you go to 5 years, you're 93. And when you go to 10 years, it's 97. I would submit that if you added some fixed income, alternative investments, private equity, private debt, private real estate, infrastructure, and some international securities, that these numbers shift dramatically for the better. I bet your 1 year goes into the mid 80s. I don't know for a fact. I bet your 3 years in the 90s. I bet your 5 years 100% if you're in a more diversified portfolio than just the S&P 500.
Well, yeah, and under the hood, there's a lot of other things there that we go over, and we have a lot of education pieces on the problem with the concentration risk inside the S&P as a cap-weighted index and reconstitution, all those things that that's why we don't just buy the S&P and call it a day. It's got great data though, which is why we kind of get forced to just, there's other data though, there's other index data that we have as well to submit to support all this stuff.
Can we do one more just for data since we're on the data train here, and we'll talk about what happens again, we use the S&P 500 because it has the most history and it's the most calculated data that we have. So when you look at the S&P 500 and you talk about the performance after the worst days, this stuff's crazy. So you look at 1 day returns, like if we go to the crash of 87, right? There was a 20% downside in a single day. There was an 11% downside in 2020. There was 9% in 2020, another 9% in 2008, and so on and so forth. So you've got these ranked, the average of the worst days is negative 8% in a single day. I mean, like that's a punch in the gut. If you look at 1 year later, 12 months later, and I think, producer Brian's got this up. Awesome. Thanks, Brian. You look at 1 year later, the average market is up 30%. So if you take the worst 1 day return and go a year later, it's up 30%. Now that starts to normalize. 3 years later, you're up 13, 5 years, 11, 10 years, 11. So holy cow, when is the best time to invest is certainly when there's been a horrible day, and then be patient, right?
The night is darkest just before the dawn.
There you go. Well said.
The night is darkest just before the dawn.
I feel like I just got brought into one of those, like Mel Gibson movies with the big sword and we're about to go to war.
Oh, Braveheart.
The night is darkest.
It's the worst right before it gets better.
Yeah. Let's wrap it, right? So we have all this volatility. Nothing changes. I mean, here we are. We're still living. We're eating, breathing, going to the grocery store, filling up our cars with gas, getting the car wash, whatever we're doing, talking about the markets. Volatility is real. I think it's here to stay. I think you have a real situation with Iran. I think you have a real situation with Iran and Israel. And we have, I think, a bigger situation with cognitive bias and dramatization and sensationalism from the media to all of us that we need to, I think, be powerful as human beings and come together and say, we're not going to fall for any of the cognitive bias. I'm actually going to seek the opposite. Well, that's what I was going to say too, Alex, is you had said, well, what do you do? What do you watch? And I think you have to watch the opposite of what you want to watch.
Oh, or watch all of it. Oh my gosh.
Yeah. Well, and really because then maybe, and not for like 3 minutes until you throw something at the TV, but if you're really going to try and digest news, I think you have to be diversified in where you get your news. The human behaviors around investments are horrible. We naturally will do the wrong thing because human instincts. The human instincts around cognitive bias and absorption of news is also horrible. So we have to fight and train ourselves, just like we train people from a financial perspective. I think we have to train ourselves from a absorption of news and media and information to be diversified, like in our portfolio. This is a new theme. I like this. We just made that up on the fly, but we're running with it.
I like it too.
I think it's good, right? But then now you know. I mean, you at least know the other side and seek to be wrong instead of seek to always be confirmed. But I think that's the message, and it does tie into your portfolio because it's the same thing. We have to seek, and we as a firm, IDA Wealth, which is our wealth management division of the Financial Detox show, is we literally seek to break it. We call it breaking what we're doing. So we take our portfolio constructions and all the different methodologies we have, and we ship that out to every firm we know of that we work with, which is all of them. BlackRock, Goldman Sachs, First Trust, Dimensional, Avant. I mean, you can name dozens and dozens of firms, JP Morgan, and we basically give them our strategies and we say, break them. Because we're seeking to find out where we're wrong. And because we've done that for so many years, it's helped us get good. I mean, it's helped us realize this is wrong. Wow, that makes sense. We didn't think of it that way. Okay, let's reposition this a little bit. That, I guess, gut check or that stress test is what allows us to be successful. That ties into your overall investor psychology which ties into the news you're absorbing, which ties into your political preferences or your political biases. And we really need to work on all of it as a package, as a human being, to be successful investors and to have financial peace of mind.
Perfect. Mic drop.
Drop it. Let's go. Okay, so we have other things coming up, though. We're going to wrap it on this. I think that's the point. Stay invested, stay calm, stay cool. Make sure you're diversified. Get a second opinion. Stress test your portfolio. And you can do that with us at IDA Wealth through Financial Detox. You can always reach out to us. Go to financialdetox.com. It's all cleaned up and looking beautiful. Thanks to Shayna and her team over at Procast Studios. Is that right, Brian? Procast Studios?
Procast Studio. Yes.
Little plug for you guys. They do a great job. Don't get them too busy, though, because if they're too busy, then they'll start charging me more to do this. I don't want that. So you guys got to promise any referrals, you keep our price the same. But they're doing a great job for us, and we appreciate your work. But check us out at financialdetox.com. You can get a hold of us there. You can connect with us. We love a subscribe on YouTube, anything like that. We're starting to put a little effort into this show. We want to make it great for you, our listeners, and impactful, help you not only be a little bit entertained, hopefully, maybe we'll stir up some emotions and get you to do a better job with your portfolio and maybe even life and all of that. So a couple shows we're going to talk about. We have some things coming up, Alex. One was I think the real estate thing is a big topic. A lot of clients talk about. We have a lot of clients that really want to understand, should I gift money to my kids to help them buy a house, particularly in Southern California or expensive areas, which everywhere is getting expensive. But should I gift money to help them buy a house? And I think it's really important to break down, and we're going to break down in an upcoming show about, is home ownership right? Maybe it's right. Maybe it is. Maybe you got to do it. Maybe it's not, though, when you look at the cost of ownership versus the cost of renting. So we'll be slinging some of that information out here very soon on one of our next shows. We're going to be talking about the 5% interest rate environment. Should we be doing something regarding bonds? That's another show coming up. What are you going to do if you inherit money? A lot of people are inheriting money. We actually have the biggest transfer of wealth ever happening right now over the next 10 years that's ever happened in the history of civilization. People are going to inherit money. You want to make sure you know what to do with that. So those are a couple teasers.
Multi-generational planning. Yeah. That's
huge.
That's maybe a one.
Is that because of the boomers? Their
it is.
age? Yeah.
It is. You look at what's happening, and my parents are the front end of that boomers. They're 78, right? Life expectancy, 7 or 8 years. So over the next 10 years, you're going to have the biggest transfer of wealth that's ever happened in civilization. So a lot of people are going to come into money who didn't earn it. They don't know the values of what created that wealth, and they don't know how to protect it. So phenomenal time to help, I think, get those people educated. And the way we do that is what's multi-generational planning. So we get the different generations of a family together and talk about the purpose of wealth. What's the family mission statement around wealth? How did you create that wealth, grandpa or grandma or mom or dad? What do you want me to do to preserve it? What should I be doing with it? And have an advisor and a team of advisors in there to lead that conversation so that we can pay the least amount of tax possible, preserve that in the transfer, and keep it around for hopefully multiple generations to go. It's a big show topic. We should just stick to that on one of them, and we will. Yeah. Well, thanks for tuning in. It's Financial Detox. I'm Jason Labrum, your host with Alex Klingensmith. We hope to catch you on the next show. Again, check us out at financialdetox.com, and we'd love a subscribe on YouTube. Say hi, give us a like, let us know what you want to hear about. We'll talk about it. Thanks so much for tuning in. I'm Jason, and Financial Detox. We're out.